E-commerce is growing even after 2020 and it's showing no signs of slowing down, and now there's fierce competition, so what do we do? In today's video, I will discuss a big e-commerce stock that had important news and updates. This is part one of the part 3 series. As we know, many companies in the e-commerce space can be disrupted or are disrupting, and it's our jobs as investors to stay updated on the latest news. According to eMarketer, global retail sales rose by 25.7% to $4.2 trillion in 2020, and there's no slowing down. By 2025, it is expected to reach $7.4 trillion, in which e-commerce is a main beneficiary. In this video, we will look at Sea Limited's new expansion into the European continent, and then the next two videos will be PayPal's new acquisition into Buy Now, Pay Later, and how Visa may be disrupting the space as well. Let's get started. Sea Limited has been in the news recently after its e-commerce platform Shopee rose 80%. Shopee accounts for almost 50% of Sea Limited's total revenue, and it's the fastest growing segment of their company. If you would like me to do a deep dive of Sea Limited, please let me know in the comments and let me know what other stocks you would like me to research. Yesterday, it announced an expansion that could take its growth even further, folks. For those of you who don't know, Sea Limited is an e-commerce giant based in Singapore or Southeast Asia. E-commerce is the fastest growing sector in Southeast Asia. It is often referred to as the three-headed monster because it operates on 3 integrated technology platforms: digital entertainment and gaming with Garena, e-commerce with Shopee, and digital financial services and payments with Sea Money. Garena is the oldest of these companies, which started in 2009. It is a global online games development and publishing company that exclusively licenses and develops games to third parties and develops their own games in-house. What's even more exciting is its fast-growing global expansion. So yesterday, Sea Limited announced it's preparing to launch its e-commerce platform Shopee into Poland, and it's currently recruiting sellers. This is the first step into the European expansion, so it's very exciting. Garena is already proving to be successful in Poland, so they're adding their e-commerce platform there. Poland's e-commerce TAM, or total addressable market, is $19 billion with huge room for growth. If this is successful, Shopee will be able to expand into other European countries. So let's look at their financials to see if the stock is being overhyped or if it's a good stock to add to your watch list. If we look at the most recent quarter, we will not be disappointed. Let me tell you. In Q2, GAAP revenue up 158.6% year over year. Now, total gross profit was $930 million, which is up 363.5% year over year, and it continues to rank number 1 in e-commerce with average monthly users and total time spent in-app in Southeast Asia. Top-line revenue growth is growing at 100% year over year, if that wasn't good enough, and full year 2021 is expected to reach $8.8 billion. Now, shares outstanding I found was growing at a rate of 1.5% year over year, and they're not yet profitable. So those are a few cautionary tales that we need to look at. So there is some risk at the moment, but reinvesting in their company is okay for me now. But eventually I would like to see profit. So let's see why I'm so bullish on this company and why you should add it to your watch list. First, it has a unique business model in which it is a mobile-first approach that drives the whole transaction all on the mobile app, very easy to do instead of offline or on websites. So it doesn't transfer you to another location, which is super smart, and it makes more consumers and a stickier business. Shopee is the number 1 mobile app and number 1 in monthly users in Malaysia, Vietnam, Thailand, Philippines, and Singapore. It's number 2 in Indonesia, with Tokopedia as number 1. Now, I'm a huge Pokemon fan, and that just reminds me of Tokapri. Okay, I'll stop. The mobile app also uses a localized approach, making it stand out. Its unique marketing strategy makes deals with local celebrities and curates their app to adhere to the tastes and preferences of each region. Second, this company has the potential to have high growth for the next 5 to 10 years. Since it is the top player in Southeast Asia, it has a TAM of 583 million, which is double the size of the US in that area alone. E-commerce is expected to grow $172 billion in 2025 with a CAGR of 23%. Third, this company is quickly growing globally. Sea Limited is currently in Brazil, and in Q1 they entered Mexico to compete with Mercado Libre. It recently announced its launch into Chile and Colombia. It is also a good stock to be in Southeast Asia exposure without the Chinese regulations. So Tencent owns about 20% of the company, which allows Shopee to flourish. Now, before you add this to your watch list, there are 2 risks that may disrupt the growth of this company that you should be aware of. If you are not a risk taker, I have a video in the link in the description below for the top 5 ETFs to buy for passive income. This video goes over the best low-cost, low-risk ETFs to buy. So back to the risk taking. Tokopedia, one of Shopee's top competitors, is merging with Gojek to create Gojek Group. There will be an estimated 100 million active users when combined, and 2% of Indonesia's $1 trillion GDP will be represented by this company. This will take market share from Shopee in Southeast Asia, so we definitely need to watch out for that. And there's other competitors coming into this space with Coupang, the Amazon of South Korea, which is entering Singapore after 11 years of operation. The second risk is the growth rate. So if Sea Limited has slower growth in the next few years, the current valuation is very overvalued. While the current price is very high, this can be acceptable due to its high growth rate. Since it's not profitable yet, the financials are a bit speculative. Price to sales, a metric that we use to measure companies that are not profitable, is around 25, which is really overpriced. So what are my thoughts about this expansion? Sea Limited is a very high growth company that is expanding globally at a stellar growth rate. It is in 3 different high growth sectors and shows no signs of slowing down. While it is not yet profitable and is overpriced at the moment, this stock is a good addition for your watch list. While there are risks of competition and slower growth, this company has proven its #1 ranking, and I believe it will do very well in the future. The global expansion is firing on all cylinders, and the news about Poland is a great addition for future growth in the European continent. If there is a market correction or a pullback to the 200 MA, it could be a good opportunity to buy and hold. Now, according to my DCF, I would buy for a long-term hold at $225, which is a little low right now. It's a bit conservative. If you are okay with a lower ROI, buying at around $250, $275 would be good for a long-term investor. So what do you think about this stock, Sea Limited? Do you think the expansion is going to cause hypergrowth? Do you think it's just a meme stock and it's very overpriced? Let me know your thoughts. This is the first part of a part 3 series in e-commerce. In the next video, I will discuss PayPal's new buy now, pay later acquisition to see if it is a good buy now. Be sure to subscribe and hit that bell notification for the next video on PayPal. And if you would like a free stock watch list, use the link in the description below to sign up for the newsletter. As always, this is Supergirl Investor here to save the world and make you wealthy. Go please be safe and happy investing. If you would like 2 free stocks and to support the channel, sign up for Webull, link in the description. And as a bonus, get a free year membership to the Supergirl Investor community, where we learn how to be wealthy and save the world.